So Nick,
Yeah.
FastClose.
Yeah.
Uh, why do customers want FastClose when Epicor already has its own reporting structure?
It's really interesting. I think Epicor have a bit of a checkered past in reporting. And, they went from Excel Connect to spreadsheet server to now FP&A. So there's always been a market for P&Ls and balance sheet, but that's really a bit of a commodity. Most products can do that. And we do that really well. And we can run in Excel and everything. But what we've been finding is that within the Epicor product itself, we're solving a lot of operational problems. For example, capture cost WIP. This is what is amazing because my background is an accountant. And in Epicor, if you don't run capture cost WIP daily, your P&L doesn't balance because you haven't got your cost of sales. You haven't moved stuff out of the WIP. So one of the add-on products that we've got as part of FastClose is we are able to run a program, the capture cost WIP reconciliation. It generates a user-defined table. We pick that up and merge it with actuals so people can get a P&L and balance sheet in real time with all that information and drill down. That is one of the big ones. But we do all sorts of stuff, reconciliations like goods received, not yet invoiced. Everybody struggles with that. On just basically keying stuff in wrongly from the purchase orders when they chuck stuff in and stuff like that, but also in the general ledger. Stock reconciliation, AP and AR gets out of balance. And we're real time against the data. So it's, as well as doing all the P&L balance sheets, consolidations, we've got lots of people who are multiple recurrences, all of that, you get this additional operational reporting, which is key to Epicor.
So one of the things I get asked when I go on site doing pre-sales, obviously the accountant wants a P&L at the end of every month, quarter, year. But the other thing they say to me is, can we see a P&L by job, by customer, by product group, by customer and product group? Does FastClose manage that?
That's a great question. One of the amazing things about Epicor is it has one of the best chart of accounts on the market, but nobody knows about it. Our customers in the States always have company, division, cost center, account code. That's called the sort of control segments. But there's this thing called dynamic segments, which if you set up the posting rules, can stamp customer, can stamp product. And it doesn't explode the chart of accounts. It's really, really clever. It just means that you analyze the P&L in exactly those dimensions. So you can get a P&L by customer, P&L by product, P&L by job. But people are reticent to change the posting rules. I don't know your experience if you get involved with posting rule changes. Probably not so much.
It's not really my bag, Nick, no.
It's because of it's a financial situation.
Yes.
Posting rules are, by its very nature, posting to the general ledger.
Yes.
So because of your background being more on the manufacturing side,
Exactly.
you
That's the dark arts, Nick.
yeah, it's the dark arts. But what's so sad is that I've been in the accounting profession and ERPs for quite a long time. And without a doubt, Workday probably has the best chart of accounts because it has 60 dimensions. It just happens automatically. They don't have a balance table. You can just roll up all of this information. But Epicor can do the same. And they do, though, need FastClose because FastClose running in real time against the tables means that you can slice and dice. We can even go over the transaction table. There's a table called TransGLC that captures all the subledger data. And even if you don't use dynamic segments, we can get deep information out of that. But you need FastClose. So that's a great question, Andy. Thank you.
Another question we get a lot, especially because we sell field service, is what the customer wants to know is, I've just generated this service contract to go and service this part for the customer. I've charged them £10,000. How much does it cost me? How many service calls have I done? How much have the parts cost? What are the warranty claims? That kind of cost. And I'm sure that's something else that FastClose can help us overcome.
I think this is quite exciting because obviously our partnership's developing and you're just taking our software to run your business.
We have indeed, yes.
And the next thing that we're going to look at is putting FastClose over the field service management system you have. The secret for FastClose is we have this thing called a catalog. And the catalog actually goes through and looks at all the tables and presents them in a way that FastClose can pick it up and presents it in a nice sort of an OLAP view, slice and dice. So once we built the catalog for that, then you'll be able to get all that information from the field management system. And it is a great question because I see an awful lot of customers looking at their standard costing and their gross margin analysis and patting themselves on the back, thinking they're doing well, but they're not analyzing the variances.
No.
So your variance account is massive.
Yes.
Nobody knows where it is,
Exactly.
what customer, what products. But we do have tools that enable you to analyze purchase price and labor variances. So you're fooling yourself unless you take that variance analysis and sort of post it back to a customer, to a product, which comes back to your question of dynamic segments. You don't really know what you're making.
No. So if I was going into a new customer, Nick, and we were setting Epicor up, Epicor has got some great costing methods: fixed cost, average cost, lot costing, last cost, standard cost. Which one would you suggest the customer used?
Well, it's interesting. It depends on volatility and sort of inflation and price changes. I think most people like standard costs because they can work this out. But if you're doing standard cost, watch what your variances are. If your variances are building up, that means you're not updating your standard. So, if that's the way you want to run your business, that's great. But the average cost and stuff is good there because you're getting more of an accurate pricing situation there. So I would look at what the market's doing. If it's going out, you can actually have both. You can do lots of different things. So some products you could do standard, and some you could do.
Something you can do, yeah, average or lot FIFO. I mean, lot FIFO we think is the most accurate. Standard is great in an industry where the prices don't fluctuate.
Yeah.
What industry that is, I've got no idea at the moment with the way the prices are going.
Yes.
But it's an interesting question because it's one that we have lots of discussion around with accountants.
Yes.
That's one that's normally quite a bone of contention is the cost method.
Yep. Absolutely.
Because if they don't look at the variance, then they've got no idea how much the part cost to make or whether they've made money when they sold it.
Absolutely. And we see this all the time. And going back to our operation reporting, the GRN number sometimes is completely the wrong way around because they haven't run their capture cost whip. They haven't got a clue what's happening. And, the key thing is, although Epicor is a manufacturing product, the main guy that signs off the checks is the financial director. And Epicor have the tools, they have the financial software, but there's a real lack of knowledge, even back at Epicor, about what their product can do, which is such a shame. If you talk to anyone, Epicor is a manufacturing product, but you could sell this product to financial-only people.
Well, one of the partners does. We know that one of our partners does sell Epicor into banks and financial industries, and they just use the finances.
Yep.
Because the finance is such a strong part of it.
We have a lot of financial customers only. And when you look at that, they do have dynamic segments.
Yeah.
Because it's all about the general ledger. It's being able to analyze and slice and dice that particular area there.
So let's just say I'm an Epicor user,
Yes.
which we are, but I'm a big Epicor customer. I've been using Epicor since Vantage. I've been through Vantage 8, Epicor 9, E11, now Kinetic. And I want to look at implementing FastClose, and I want to look at dynamic segments. Does that mean I've got to rewrite my chart of accounts?
No, that's the beauty of this, is that basically we need your skill set to understand the posting rules.
Sure.
So Andy, maybe that's something that you and Harry and Gary need to have a look at, because people that are hesitant to go there, the posting rules are looks a bit codey. And what you need to do is to sit down with a customer and say, how do you want to analyze your business? How many dimensions do you have to run your business? Obviously, company, division, cost center, those are the ones that rattle off. But employee, when you have a hotel expense, a dynamic segment would pop up and say, who was it that say had that hotel expense? So it analyzes employees. The customer and the product can be analyzed in the general ledger. And if you do analyze it in the general ledger, you then have the opportunity to do a posting. So a dynamic segment enables you to do a journal entry. So when you want to spread those journals back, you can. So it's a question of sitting down with your customer and say, how do you want to analyze your data?